Hey everyone, welcome back to our channel. If you're new here, please subscribe. I'd really love that. If you're returning, how you doing? What we're going to be talking about today is the fact that it's time to file our tax returns, and many of us are facing smaller returns, shrunken tax credits, and a lot of deductions, right as inflation and higher debt loads are biting into our budgets. The IRS starts accepting tax returns for 2022 right now, and it will start issuing tax refunds in weeks and months that follow. And some of us could be in for a very big surprise. People should absolutely expect smaller tax refunds this year, and frankly, some people might even start to owe the government money. There's really four main reasons why, but the first one is no more stimulus checks, and the second one is that what was called enhanced child credit, that is now gone. A special pandemic era tax break for charitable deductions was also nixed. So even after a volatile year on the stock market, some people might face taxes on investment gains, especially if they own mutual funds that they had to sell off stocks. So in 2023, you absolutely need to file your federal tax return electronically. The IRS is saying that people who file electronically should expect to get the refund within the first 21 days if they choose direct deposit and their return has no issues. The other option is less fabulous, obviously. So people who submit their returns on paper are more likely to join the agency's largest backlog. And the IRS also said that in late 2022 that they have something like 9 million unprocessed tax returns, and it turns out that 7 million of them were paper returns. And because of the government response to the CV, many Americans got that $1,400 stimulus check in 2022, the third of such payments. But a whole bunch of taxpayers actually received what's called a recovery rebate credit. And they got the $1,400 per person on their 21 taxes, plumping their tax refund or lowering their bill, right? But now that's gone for people dealing with their 22 taxes. So for this tax season, many families with two children that are under the age of 6 years old will not be able to count on that extra $3,200 worth of tax credits that helped them out last year. And that's because while pandemic legislation provided the $7,200 in combined tax credits for two children under the age of 6 years old in the last tax season, that same family is now looking at maybe $4,000 in credits, okay? So in 2021, parents were getting what folks called the enhanced child tax credit. It was either $3,000 for children under 18 or $3,600 for children under the age of 6 years old. And the child tax credit and related pandemic policies had a large impact. The U.S. Census Bureau said that the measures sent child poverty rates down 46% in 2021 from 9.7% in 2020 to 5.2% in 2021, to the lowest child poverty rate on record, based on the supplemental poverty measure, which was introduced just over a decade ago. So in 2022, now that the child tax credit is going back down, it's reverting back to the $2,000 level. And in general, taxpayers can only deduct donations to charity from their taxes if they itemize these deductions rather than take a standard deduction. And special temporary tax break change for returns covering 2021. It was a $300 deduction for people who don't itemize, a $600 deduction for married couples, but Congress didn't extend this deduction for 2022, okay? Now, On the investment gains front, 2022 was a wild year, obviously, on Wall Street, and the Dow was down, the NASDAQ was down, so people might be thinking, why am I having a bigger tax bill to pay because of investment gains? I didn't have any investment gains. Doesn't matter. The market's volatility forced many mutual funds to sell more holdings than they normally would, including profitable ones, and then distributing those gains. And if investors hold the fund directly rather than in a tax sheltered account like a Roth IRA, they'll have to pay taxes on that gain. So your investment portfolio might have actually declined, but your tax bill nonetheless, it got bigger. So anyone in this position should try to offset your capital gain. It would also help if you sold any of your losing stocks to balance out those winners. And under the tax law, you can actually use your tax losses like those to offset up to $3,000 worth of ordinary income. Now, millions of Americans could be excused for freaking out a bit when the government announced it would start requiring like Venmo and other peer-to-peer payment like Cash App, Zelle, and stuff like that, PayPal apps to report income for goods and services worth $600 or more annually. And that was a sharp drop from the previous threshold of $20,000. And things eased up a bit last month when the IRS postponed that plan. But as financial experts noted, taxpayers are still obligated to report their full income on their tax returns, whether they received a 1099-K form or not. So we're in a gig economy, okay? And we've got a ton of people who are freelancers and 1099 workers and contractors, consultants, people who do side hustles, etc. And it's understandable for those workers who feel relief about the delay, but they should use this year to get used to the idea that the rules are changing. And I am included in one of those, okay? I am actually considered self-employed, okay? So the general deadline to file your 2022 tax returns is April 18th, which is a Tuesday. And that's because Washington, D.C.'s Emancipation Day holiday falls on April 17th. And if you know you won't make that deadline, do yourself a favor and ask for more time, okay? You can get extensions. And I cannot stress enough to people, but if you need this extension, just go ahead and file that form of a 4868 with the IRS, okay? And that will give you an extra 6 months, and then you have until Monday, October 16th to actually submit your taxes, even if you have to do payments and whatnot, okay? So reciting the litany of problems that can stack up without the extension, that failure to file and failure to pay penalties can accrue each and every month with interest added on, and any unpaid tax amounts. It's a pain in the arse, but it happens, okay? So anyone filing an extension, you should estimate and pay any owed taxes by your regular deadline to avoid possible penalties, all right? So it kind of is always shocking that so many people don't do this when they know they're going to wait until the very last minute. I know I wait until the last minute sometimes, you know, because it's like, oh my God, I just don't have enough saved up, you know, but it's true, I do. But, you know, you really don't want to play around with Uncle Sam on this one. You really don't. So if you find yourself that you are in over your head, help is available. And, you know, it's free. It really, truly is. But if you go to irs.gov, if you've made less than $73,000 in 2022, you can use, because this is what I use, okay, it's IRS Free File, and it basically does your taxes for you at no cost, okay? And even if you're 25 instead of 65, you know what I mean? The American Association of Retired Persons can give advice, and ARP has also trained experts who will help you to prepare and do your taxes or to answer any of your tax questions, okay? And there's also another option to look for local community-based organizations as well. So even if you just do like Google search in your area about free nonprofit credit counselors, free nonprofit tax counseling agencies near me, that type of thing, you're likely to find agencies that can provide you with some assistance and support. So now, 2023, unfortunately, is already shaping to be quite a financial 1, 2, 3 punch to the gut for the American family, okay? And not only do we still have high inflation, but we've still got crazy stock market and a lot of volatility, rising interest rates, all of which are contributing to a lot of layoffs. Just look at the news, okay? You've got Google laying off, you've got Goldman Sachs laying off, you've got Amazon laying off. Okay, these are huge companies, tech companies. They are just laying off by the hundreds of thousands, and it's like they don't care, you know what I mean? So add in the potential for smaller tax refunds, and it kind of feels like this is just way too much. You feel overwhelmed, you just don't know what to do, and you know, you feel like, okay, my brain's gonna burst, you know. I don't even know if it's a 1, 2, 3 whammy, or if it's a 1, 2, 3, 4, 5, you know what I mean? But we've been doing our taxes for so long, and now that I'm self-employed, we actually have to go to an accountant because they actually want to know, okay, well, what does your workspace look like? How many square feet of your home do you use for your workspace? Okay, well, actually, my whole house is my workspace. I work in my dining room. I have a spot in my bedroom. I use over there, over here, over there, over here. And they're like, wait, calm down. And I'm like, well, I'm serious. I don't have like an office, you know. It's, you want to know my dining room? What, you know? You know, it's crazy. But they actually do have to know exact square footage of where I sit in my home to do my videos. Yeah. So the challenges are making it crucial to pay very close attention to our finances and how we spend and how we save in 2023, okay? So the IRS has already announced a huge change, and it is standard deduction for 2023, raising it to $13,850 for individual filers, which is a $900 increase, and $27,700 for couples filing jointly, which is an $1,800 increase. So while many of us are focusing on finances during tax time, you know, it's always better to plan ahead. So you may need to do some forecasting using tax software, using a paid professional, or even free tax help, you know, to be able to say, okay, what is my tax situation and likely to look like in 2023, you know, that type of thing. So overall, the IRS is in a better position now than they were 1 year ago, but customer service and lingering effects are a backlog, okay? The elephant in the room, if you will. So, and that's according to the National Taxpayer Advocate. And here's what this elephant looks like right now. Okay, there's millions of people who filed paper tax returns or saw their e-filed returns suspended for review and had to wait 8.5 months or longer for refunds. Okay, so in 2022, less than 13% of callers to the IRS reached someone who could actually help them. Okay, now callers' average time on hold rose from 23 minutes to 29 minutes. Identity fraud, that remains a huge issue. On average, the IRS said in mid-December it is taking about 360 days to resolve identity theft cases, and this is also an issue to issue a refund as well. So the good news is that since the close of 2022 filing season, the IRS has made considerable progress in reducing the volume of unprocessed returns and correspondence. And we have not yet really, we have begun to see the light at the end of the tunnel. And, you know, I just hope that you guys are, you know, being prepared when it comes to this, because I know a lot of people, they literally rely on that tax refund, and I'm like, you shouldn't do that, but a lot of people do. So Just be careful. This is your warning. It's not, you're not going to be getting the tax refund that you normally used to. Okay. All right, guys, I'm out of here. You stay safe, you stay positive, you keep prepping, and as always, fearless. Ciao.